Hello everybody and welcome once again to the weekly wrap-up from forexlivetoday.com, wrapping up the week in the currency markets for Sunday the 30th of October 2011. More importantly, we'll be looking ahead to next week and some further opportunities and hopefully carrying on the success rate from the week that we've had just passed. Okay, let's look closely here. First chart that we're going to look at, as usual, is the S&P 500. Now, the risk rally has clearly continued this week. Now, this past week was all about the EU summit and the agreement, let's call it, that has been reached by EU members regarding what they're going to do about this debt crisis. Okay, so what they've come up with is private Greece debt holders are going to accept 50% less than what they should or what they are owed. They are going to leverage the ESFS. Now, the ESFS is a special fund that has been created to help with situations such as this. What they're basically saying is they're going to leverage it, so give it more money in a very dangerous way. Let's put it like that. And the third thing that they have agreed on is the recapitalisation of some of Europe's banks, which of course is necessary. However, many people are saying that these the numbers that they're talking about are inadequate. Now, I've had a quick look around actually before posting this video about this, and I am very aware that there are lots and lots of analysts, commentators who are still extremely bearish. Now, as we talked about last week, it's fine to have your fundamental beliefs and it's fine to have your convictions about the state of Europe and the state of economies. However, look at the markets. The markets are not listening to these perma bears at the moment. So while I happily admit that I still see major problems in Europe, and I do not see the EU summit resolution as a true resolution, I feel further down the track the same issues are going to arise, and I still feel that eventually Greece will default. I still think they will not be able to pay the debts even with the 50% cut. However, as I said last week, we are looking at the price action of the markets as traders, and we are trading accordingly. Last week we were all talking about the breakout of S&P 500 and pound dollar. Was another one that had broken this resistance here, and we were saying very good, nicely correlated. However, we were looking at our euro dollar and we were saying it hasn't broken through its support yet. So what was our trade opportunity that we were talking about? Well, we said if the market continues to rally, if risk appetite trends continue to move forward, then we would be long euro. If risk appetite trends scaled back and started to drop, we would be short cable or pound dollar. Another one that we threw into the mix was the Aussie dollar. We said euro dollar or Aussie dollar if you were going to get long. Hopefully some of you had been paying attention, because the Aussie dollar in particular and also the euro dollar had really good weeks. The Aussie dollar is on course for its best month of October ever. Well, when I say best, let's say most bullish month. So, doesn't bode well for the US dollar, does it? However, hopefully you got aboard some of those trades. Now, looking towards next week regarding these same positions. So, anyone who is still long euro dollar, anyone who is still long Aussie dollar, I would be definitely taking at least some money off the table, or perhaps taking all of your profits. You're at a big point of resistance here on Aussie dollar. Stalled out on Friday, really tight range, and we're heading into a Reserve Bank of Australia interest rate decision on Tuesday morning Australian time. Now, the markets have priced in a 25% cut. The Australian press is virtually guaranteeing that it's coming. However, with the Australian dollar so extended after this run, you would think that a cut may have some bearish outcome for Aussie dollar. This is why I would be exiting long positions Aussie dollar before Tuesday morning Australian time. You are there's more opportunity to get back in after, but we want to reduce risk. Remember, trading, it's all about seizing opportunity and reducing risk, taking all subjectivity out of it, leaving your biases behind, and just looking at the market from purely an objective point of view. Okay, let's look at cable for a moment, because cable was the one that was really confirming the risk appetite trend last week. So it is a little surprising that some of our other currencies, for example euro dollar, has really streaked ahead. But we did say last week that it had some catching up to do. So perhaps it is just realigning. Sorry, ECB. There is also an ECB rate decision this week. Some may say, thankfully, we will not be listening to Mr. Trichet this month. We will have a new gentleman who will be delivering his first speech. Maybe he will want to, make his mark. The expectations are for no change. So any cut in ECB rates, and we'll see some sharp selling of the euro against pretty much all of its crosses. So you would expect euro dollar to be dropping. That's later on in the week. What else have we got to look forward to? Again, focusing on the US dollar a little bit, you can see dollar yen has continued to weaken. The Japanese yen has continued to strengthen against the US dollar. And once again, no intervention, just a lot of talk from the Japanese. However, you can see this former support has now started to act as resistance. So 3 times this week it attempted to get above this 76.30 point and failed, and then sold off towards the end of the week. And another star performer this week was dollar Swiss. As we mentioned last week, this at the start of the week before last week, we were bullish off the bounce from this support here. But once it broke down and closed the week to the downside, we were expecting further downside, firstly to our 200 moving average, and then with further supports at these fib levels. So you can see there has been some support found at the 200 moving average, but again, this has played out technically perfectly. So for all you technical analysts out there, I would imagine that last week was a great week for you as well. And once again, as you can see, buying a market that you are fundamentally bearish about is just how to make money as a trader. I get really tired of perma bears complaining about the markets. They need to really take a look at themselves. I cannot see how they can ever be successful, to be honest, and perhaps that's why they're working as analysts in the first place, because we have to let the market guide us way more than we let our fundamental beliefs. We keep them there because when this market does realize that perhaps it is overbought and perhaps it is over optimistic about what these European politicians can achieve, and it starts to sell off, it will probably sell off quite aggressively. But if we already have that in our mind and we are positioned accordingly, we're not too exposed to short dollar positions like across multiple crosses, then we should be fine. So as a wrap up, looking forward to next week for the majors. We have rate decisions for the euro, We have a rate decision from the Bank of England. We have rate decisions for the Australian dollar. We have the FOMC rate decision for the US. Obviously, there will be no change, but it'll be very interesting to hear what they say in the commentary. You could get a situation where they cut rates in Australia and this starts to sell off, and then later on you have the FOMC where they talk about further austerity measures, and that will cause a US dollar sell-off, which will then probably reverse this move and continue. So I'm very closely watching the Aussie dollar, as you might have suspected from this video. I'm really liking it for some potential for the next week. Good luck, everybody. See you all next week. Remember, trade with the markets. Don't listen too closely to bearish analysts all the time, and you should be fine. Bye for now.